Hi, this is Mohan Kumar from Brainy Bolts, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 9th, 2023. Let's have a quick look at the charts. So you're looking at the two-view chart in the TradingView platform. So you have the Nifty spot on the left, Nifty futures on the right. Both these charts are set to a 3-minute time frame. So before I bring the three indicators on, because of which I call this strategy as triple threat, because these three indicators, which I'm yet to bring it on, gives us three entry conditions, right, and exit conditions based on which we execute every single trade. So let's look at the price action, before these indicators are brought on. So the price actually opened slightly higher than yesterday's closing, as you could see, right? And the price swiftly moved, and then it actually reversed from this point, right, making higher highs. And then at this point, the price actually moved into a consolidation zone. As you could see on this particular chart, there was a nice consolidation here, and then the price actually made a major reversal. It went below the day's low, and it also actually moved below the previous day's close, right? As you could see, it was a major move to the downside, and then finally towards the end it corrected a little bit, and it actually consolidated and closed. And today being a fin nifty expiry, there was a lot of volatility, right? There was a move to the upside, then there was a move to the downside, and then actually it actually moved. It corrected a little bit post a major fall, and then it actually closed somewhere right here, right around yesterday's closing. So that's how the price behaved. So let me clear out these drawings and bring the indicators on. So I've talked enough about these three indicators, which are the price levels, or the locations is what I would call, and the market participation, which are indicated by the three dots, the blue, black, and green. And again, the third indicator is going to be the trend meter. So these three indicators have equal importance, and it's based on these three indicators we take trades, in conjunction to the price action pattern and the candlestick patterns. So I've talked enough about these three indicators as to how these indicators ought to be used in conjunction to the price action and the candlestick pattern, and how do we execute trades, based on the signals as given out by these three indicators. So please do look into the other videos to get to know about these three indicators, right? So now let's look at the same chart with these three indicators applied. Now you could see the price opened above the previous day high, which is this black line, right? On the futures chart, it opened slightly below the previous day high. It saw some resistance. It moved towards the moving averages, right? And you could see the moving averages are moving higher. They're wide apart, which indicates that the trend to the upside is pretty strong, right? And yesterday was a trending day. You could see the central pivot range. It's a wide CPR, and this price moving back into the previous day high, right, into the raising moving averages, is it's a good pullback pattern. Now it's a trend continuation pattern, which is one among the five patterns that are discussed, that we discussed in the webinar, right? So this is a very good trend continuation pattern, and this move happened before 9:45, which usually is the time that we look to enter into trades. The first 30 minutes we do not get into a trade, but if there is a good setup that forms before 9:45, we consider that as a low probability setup, right? And you would get into this particular trade with a reduced lot size. So this is going to be your entry, and this is going to be a stop loss, and you're going to be into the trade as long as the trend meter moves into the red zone. So as you could see, the trend meter was like midway. So this is all a signal for the trend continuation. So the trend continuation from yesterday, based on the location, which is this major location, the price moved above and retraced back, and the trend meter also is midway. And look at the moving averages. So all these, and there is a participation right here that's coming off of the moving averages. So it is all an indication of the trend continuation. So we get into a trade, considering this as a low probability because the price is below this, right? But anyways, the morning momentum is always going to be greater compared to the um, the other times during the day. So we take this chance. It's a nice move to the upside, as you could see. So we would have easily stayed into the trade as long as this price hit the daily resistance, and this was a good trade to the upside. Suppose this particular move, you could see that the price got some stiff resistance around the daily resistance right here, right? And even though the price moved higher, the trend meter was kind of sliding down. It was declining, right? It is into the red zone, and this clearly indicates that the trend to the upside may be weak. Even though yesterday was a good trending day to the upside, right? Today also the moving averages are wide apart, so it is not a short entry at this point. We do not get into a short entry because the price is way above all three moving averages while they are wide apart, right? You could see the moving averages are wide apart, and each of these moving averages could act as a strong support. But as you could see, when the price touched the daily resistance, it actually swiftly moved below the green moving average and into the blue moving average, as you could see right here. And post this move, this actually gives us an indication that the price to the upside is has lost its momentum. It's getting weaker, and this move between the moving averages, as you can see, the moving averages are now kind of like flat, and it's a consolidation right here. A lot of participation coming around, and these candles with a lot of participation, the price is moving below these candles, as you could see this zone, and the participation that's coming in right here is a key indication looking at the trend meter, which was not able to get into the red zone, but rather post this consolidation or during the consolidation, it was moving to the higher. So this clearly indicates as the price was remained flat, the trend meter moved higher towards the red zone, indicates that the price to the upside is weak, right? And the trend down, the price moving downside is going to be quite a probability. It has a high probability for the price moving down. So this particular candle right here with a huge participation post the consolidation acts as our entry candle. So the stop loss is going to be right above this, the entry is going to be right below this, and you get into a trade and you stay into the trade as long as the trend meter moves into the red zone. As you could see, this area could act as a strong support, right? But this is your first target. You could actually take your profits, like 50% of your lots you could actually exit out of the trade, and you could stay into the trade as long as the price is within the green moving average, and you could trail your stop loss to the green moving average. And once this level is broken, this level becomes your you trail your stop loss to this level, and as it moves down, the price moves into a major location, which is the central pivot range. Now this is going to be another major location, and this is where you take your profits. So we stick to the plan, we trade as per the facts, and we actually have a very limited stop loss. The stop loss is always limited to one candle, right? But our rewards are going to be infinite. We trail the stop loss, we actually stick to the green moving average and the major locations, and look at the price action and the participation in the pattern. Like when the price was getting resistance right here, look at the price is way below all three moving averages. The price steering through these moving averages, the probability is very very low. And likewise, the price is way below, the price moved way below the previous day high on the futures chart, right? And it's way below all three moving averages. It's a clear indication that the trend to the downside is quite obvious, and it's very strong. So you get into the trade, you stay as long as the trend is trade meter gets into the green zone, and you take your profits. So this exactly is how you take trades based on the signals given out by these three indicators. We don't rely upon indicators. We also look into price action, moving averages, and candlestick pattern, and that is why this strategy is so solid. That we do not get false signals. And if you stick to the strategy, you always get into high probability setup, and the risk to reward is really unbelievably amazing. So if you like what you're seeing, please do like this video and subscribe to my channel to get notifications on any new videos that I post. So I have a beautiful course that I've crafted. It's called the Triple Threat Intraday Strategy course. It's an end-to-end course targeting beginners and experienced traders. It talks about all aspects of the strategy, the indicators, and there's a lot more that's being discussed. And you can get started with trading right from month one. So please do drop a message to my WhatsApp and email ID to get to know more about this course. And until I get back to you with another video, it's bye from me, and take care of you and your loved ones. Bye bye.